The US's actions have drawn international criticism and even raised geopolitical risks, particularly in the oil markets. Let's unpack what this means, though, for global markets. We're speaking to Dr. Iraj Abedian, Chief Economist at Pan-African Investment and Research Services. Iraj, thank you so much for joining us. A good morning to you. Compliments of the season, but certainly not a good time of the year at all. If you're Nicolas Maduro and, of course, his wife, and a few people out of Venezuela as well. The people of Venezuela have their own sense on how things are faring. But how dramatic could this be to a global shift in not just oil markets, but markets in general, do you think?
Compliment of the season to you and to our viewers to begin with. I hope the year will calm down after this dramatic start to 2026. As far as the oil market is concerned, at the moment, in my view, there is very little risk of oil prices rising. Bear in mind that the context to the current oil market at the moment is last year, oil prices fell by almost 25%, something between 23 and 25%. So globally, there is a glut of supply. The demand is not that high. Moving away from fossil fuel has been at play for the past 10 years. And at the same time, some key suppliers of oil globally, namely Russia, Iran, and Venezuela, have been on some or other kind of sanctions, which means the global market has had some kind of sanction busting, discount pricing of oil. Therefore, at the moment, this particular event in Venezuela is unlikely to cause any increase in the price. That's in the short term. In the medium term, of course, it will depend how the situation in Venezuela pans out. It's very, very early days. If President Trump gets his way, in the medium term, actually, the oil price could go down. But as I mentioned, we have no way of predicting how this thing will pan out at the UN, within Venezuela, and within the United States.
Yeah, I mean, when one takes a look at the oil price itself, though, I mean, it's hovered between $70 and $60 a barrel over the last year or so anyway, and really that movement has been a slow decline to this point. Has the volatility of that oil price, however, shifted considerably? And what I mean by that is, previously, when you had things like the Gulf War, you see sporadic and really major moves when it comes to the oil price. But the moment you even started seeing Russia invade Ukraine, that shift wasn't as volatile as previous years. Why is that?
Because the supply, before when we had, for example, the threat of OPEC cutting the rates or something happening in the Middle East primarily, big players, big sources of demand for oil were the Western countries, US in particular. Over the past 15 to 20 years, US has become self-sufficient, has become actually an exporter of oil. China has become very, very significant in terms of demand for oil, but China has found ways of getting cheap oil from Russia, from Iran, and to some extent from Venezuela. So again, the volatility has become less and less because the chances of supply running down or being cut in a coordinated way. For example, today, no matter what OPEC decides, Russia cannot not sell oil, has to sell oil to pay for the war. Yeah. And no matter what OPEC decides, Iran has to illegally sell oil against sanctions and discount them at 40, 50, sometimes 60%. And therefore, to the extent that there are parallel markets for oil market, there's a formal market and there is an informal sanction busting, which has become more and more. And therefore, that affects the lower volatility of the prices, knowing that some of the suppliers are bound or forced to sell no matter what.
Okay, so before I go on a more global context, let's put it into South Africa. If that means that the oil price generally trends slightly lower, if the United States has their way predominantly, that doesn't necessarily strengthen their currency, which means that for our own petrol price, we could see a shift sideways.
Well, it depends whether or not the strength of the rand holds. If the rand maintains its strength, which has over the past 6 months and over the past year has held very steadily, and is likely to hold it as de-dollarization happens and the petrodollars become less a factor in underpinning the strength of the US dollar. US dollar gets weaker and weaker, and therefore, or at least it doesn't surge back. That means rand can maintain its strength for a while. Imports, all imports, including fuel oil, becomes cheaper. And if at the same time the dollar price of oil goes sideways and or has a steady decline, we could have a very positive benefit from a declining dollar price, at the same time a strengthening underpin for the currency. And therefore, I believe that we're going to be one of the beneficiaries of this geopolitical situation.
Okay, that's some marginal good news, I suppose, in what is a dire situation itself. But President Trump has said that the US's oil companies will rebuild Venezuela's oil industry. What are the likelihood or the chances of that from what you know around Venezuela and the way its oil market is sort of based?
I think President Trump, the best I understand it, wants to replicate what Americans did in Iraq. They invaded it, they incurred a lot of costs, but then they took charge of the oil facilities and kind of repaid themselves. So to the extent that President Trump wants to refine and copy that model, we have to see how the politics pans out. If Venezuelans army and political structures comply with that, then for sure you'll get American oil majors going in, bearing in mind that the Venezuelan oil industry has been neglected for almost 20 years, and therefore it needs a lot of reinvestment, upgrading of technology, and resupplying of this major, possibly the largest reserve of oil in the global market. What it means that Americans are going to become a bigger player in the geopolitics of fuel globally, and more specifically, or access to oil and related products.
I mean, they're not an OPEC, right? So what does that do to that shift? Does that mean that they all of a sudden get a foothold in OPEC now because they'll be possibly running Venezuela's own oil reserves?
Also, they're going to put enormous amount of pressure on the existing OPEC players, more specifically Russia and Iran, bearing in mind that there's another side battle going on between President Trump and the Iranian regime, and that also is a major player in this game of chess played around oil, access to oil, and the price control on the oil price. So I think we're seeing a very complex game being played. It's not a straightforward battle between the president of Venezuela and Trump, or between president of the United States and the Iranian regime. It's an integrated technical geopolitical game being played, but all revolving around the price of oil and access to oil.
What role here does Europe and Asia play? They're major consumers of the stuff, especially the likes of China, for example, right? But it feels as though with their lack of condemnation to a certain degree, and without them really doing much at this point, they're just going to take on whatever price is given to them.
Correct. And China has already well balanced its bet. On the one hand, having a very close relationship with Saudi Arabia, is an ally of Russia in many ways, and is not upsetting the United States. And interesting enough, President Trump already yesterday assured China that their access to oil will not be affected. So China is sitting on his hand, waiting for cheaper oil to come, and that's really all that they want. Their benefit in economic terms, and to some extent geopolitical terms, rests on a cheap and cheaper access to oil, and the rest is a sideshow that they will play it in a very soft and gentle way. They will not take a position in any way that would potentially jeopardize their access to oil, not just now, but in the medium term, because the medium term remains uncertain.
Yeah, it's absolutely fascinating, though, Iraj. We've even seen those blockades to the Suez Canal, whether it be through Houthi rebels and the such, and that entire scenario, and still oil prices have moved lower, not higher, not back to that $100 a barrel. What would you be watching out for over the next couple of months when it comes to this oil price?
I think I will definitely watch, like many other analysts, watch what happens in Venezuela, how the Venezuelan army and the new president, who was a deputy president before, respond, and the United Nations Security Council, if they decide to come to some kind of appeasement with President Trump and allow the US to kind of control the next few years of transition to a new dispensation in Venezuela, I would expect the oil price to stay steady and with downward pressures, and that's going to be a key change in the global geopolitics of oil.
Iraj, always good chatting to you. Thank you so much for your insights on this one. Dr. Iraj Abedian, the Chief Economist at Pan-African Investment and Research Services, as we just talk about the impact on the oil price that the military action on Venezuela could have on oil prices.